Breaking news that could change your financial situation. The moment millions of Americans have been waiting for is finally here. The Treasury Department has just announced that $1,400 stimulus checks will begin processing on May 17, 2025, marking a crucial turning point in the nation's ongoing economic recovery efforts. But here's what's really catching everyone off guard: the eligibility requirements have shifted dramatically from previous stimulus payments. Are you one of the millions who qualify for this unexpected financial boost? Or could you be among those who might miss out due to the new strict criteria? Picture this: while many Americans are still struggling with inflation and mounting bills, some could see their bank accounts jump by $1,400 in just a matter of days. But here's the burning question: why is this happening now? And what triggered this sudden release of funds? The answer might surprise you, and it's directly connected to recent economic developments that nobody saw coming. Will this be the last stimulus payment we see? What about those rumors of additional support coming later this year? And most importantly, how can you ensure you're not left behind when these payments start rolling out? Stay tuned, because I'm about to break down everything you need to know about this game-changing stimulus update. Before we dive deep into these crucial details that could put $1,400 in your pocket, make sure you're not missing out on any future updates. Hit that subscribe button and smash the notification bell right now. Let's start with the most pressing question on everyone's mind: why are these stimulus checks being released now? The answer lies in the recent economic data that's been causing serious concern among policymakers. Despite previous optimistic forecasts, the latest reports show that middle and lower income households are still facing significant financial pressure. The combination of persistent inflation, although lower than previous years, and stagnating wages has created a perfect storm that's prompted this emergency response. The Treasury Department's decision wasn't made lightly. After months of heated debate in Congress and mounting pressure from economic advisors, the breakthrough came when new data revealed that over 35% of American households are still struggling to meet basic expenses. This stark reality, coupled with concerning trends in consumer spending and household debt, finally pushed legislators to act. But here's where things get interesting and potentially complicated for many Americans. The eligibility requirements for this round of stimulus payments are notably different from previous distributions. The government has implemented what they're calling a targeted approach to ensure the funds reach those most in need. This means that even if you received previous stimulus payments, you might not automatically qualify for this one. Let's break down the new eligibility criteria that will determine whether you'll see that $1,400 deposit in your account. First and foremost, individual taxpayers with adjusted gross incomes of up to $75,000 will receive the full amount. However, the phase-out threshold has been lowered to $80,000, meaning if you earn between $75,000 and $80,000, you'll receive a reduced payment. For married couples filing jointly, the full payment threshold remains at $150,000, with a phase-out limit of $160,000. What's particularly noteworthy about this round of stimulus payments is the additional qualifying factors that weren't present in previous distributions. The government has introduced what they're calling economic impact indicators, specific circumstances that could make you eligible even if you're slightly above the income thresholds. These include factors such as significant medical expenses in 2024, job loss or reduced hours due to economic conditions, and increased dependent care responsibilities. Speaking of dependents, there's good news for families. Unlike previous stimulus payments, this round includes additional support for dependents of all ages. This means adult dependents, college students, and elderly relatives claimed on your taxes could make you eligible for extra funds. The supplement for each qualifying dependent is set at $500, with no cap on the number of dependents per household. But here's something crucial that many people might miss: the timing of your most recent tax filing could significantly impact your eligibility. The IRS will be using your most recent tax return to determine your eligibility, which means if your financial situation has changed recently, you'll want to ensure your records are up to date. This is particularly important for those who experienced income changes in 2024 or early 2025. Now, let's address one of the most common questions I've been receiving: how will I receive my payment? The distribution method will follow similar patterns to previous stimulus payments, with direct deposit being the fastest way to receive your funds. If the IRS has your banking information on file, you could see the payment in your account within days of the May 17th processing date. For those without direct deposit information on file, paper checks and EIP cards will be mailed out, though this method could take several weeks longer. One aspect that's generating considerable discussion is the potential impact of these payments on the economy. Economic experts are divided on the long-term effects, but most agree that this injection of funds could provide crucial support to local economies. When similar payments were distributed in previous years, data showed significant increases in consumer spending, particularly in essential sectors like groceries, utilities, and healthcare. However, there's an important caveat that everyone needs to understand. These stimulus payments are part of a larger economic support package that includes several other provisions. While the $1,400 payments are grabbing headlines, the package also includes extended unemployment benefits, rental assistance programs, and small business support. Understanding how these different components work together could help you maximize the financial support available to you. For those concerned about taxation, here's some reassuring news. Like previous stimulus payments, these $1,400 checks will not be considered taxable income. However, it's important to keep records of any payment you receive, as you may need to reference this information when filing your 2025 taxes. The IRS will be sending out Notice 1444-D to payment recipients, which you should retain for your records. Let's talk about the timeline for these payments. While processing begins on May 17th, the actual distribution will occur in waves, similar to previous stimulus rollouts. The first wave will primarily target individuals who have direct deposit information on file with the IRS and meet the clear-cut eligibility requirements. Subsequent waves will include those receiving paper checks and EIP cards, as well as individuals whose eligibility required additional verification. One of the most significant changes in this round of stimulus payments is the improved system for tracking your payment. The IRS has updated their Get My Payment tool to provide more detailed information about payment status and expected delivery dates. This enhanced transparency is a direct response to feedback from previous distribution rounds, where many Americans expressed frustration about the lack of clear information regarding their payment status. But here's something that many people overlook. There are several steps you can take right now to ensure you receive your payment as quickly as possible. First, make sure your address is current with the IRS if you've moved recently. Second, if you haven't filed your 2024 taxes yet, considering doing so promptly could work in your favor, especially if your income has decreased. Finally, ensure your direct deposit information is up to date if you've changed banks recently. For those who might have missed previous stimulus payments, there's also important news. The IRS has implemented a new recovery process that allows eligible individuals to claim missed payments from previous rounds while also ensuring they're in line for this current distribution. This is particularly relevant for people who experienced significant life changes or income fluctuations during the pandemic years. Let's address another frequent question. What if I don't receive my payment automatically? The Treasury Department has established a dedicated portal for payment issues, allowing individuals to submit claims if they believe they're eligible but haven't received their payment. This system includes an appeals process for those who feel their eligibility was incorrectly assessed. Something that's particularly noteworthy about this stimulus round is the emphasis on fraud prevention. The Treasury Department has implemented enhanced security measures to prevent payment fraud and identity theft. While these measures might slightly delay some payments, they're designed to ensure that funds reach their intended recipients and aren't intercepted by scammers. Speaking of security, it's crucial to be aware of potential scams surrounding these stimulus payments. As with previous rounds, fraudsters are likely to attempt various schemes to steal personal information or payments. Remember that the IRS will never call, text, or email you asking for personal or banking information related to stimulus payments. All official communication will come through mail, and payment information should only be provided through official government websites. For those wondering about the future beyond this payment, there are several important factors to consider. While this $1,400 payment is significant, it's part of a broader economic strategy that could include additional support measures in the future. Economic indicators and political developments in the coming months will likely influence any decisions about future stimulus payments or other forms of financial assistance. One particularly interesting aspect of this stimulus round is its potential impact on different demographic groups. Analysis of previous stimulus payments showed varying effects across different age groups, income levels, and geographic regions. Understanding these patterns could help predict how this round of payments might influence different communities and economic sectors. For families with children, there's additional complexity to consider. The relationship between these stimulus payments and other family-focused benefits, such as the child tax credit and earned income credits, could affect your overall financial picture. It's worth taking time to understand how these different benefits interact and how to maximize their impact on your family's financial stability. The rollout of these payments also coincides with several other economic initiatives at both federal and state levels. Some states are implementing their own supplementary support programs, while others are focusing on targeted relief in specific sectors like housing or healthcare. Understanding how these various programs interact could help you access additional support beyond the federal stimulus payment. Looking at the bigger economic picture, these stimulus payments are expected to have significant ripple effects throughout the economy. Previous rounds of stimulus payments led to noticeable increases in consumer spending, particularly in sectors hit hard by economic challenges. This injection of funds could provide crucial support to local businesses and help maintain economic momentum in communities across the country. For small business owners and self-employed individuals, there are special considerations regarding these stimulus payments. The relationship between stimulus eligibility and business income can be complex, and it's worth consulting with a financial advisor to understand how these payments might affect your business planning and tax situation. Another important aspect to consider is the impact of these payments on personal financial planning. While the immediate relief is welcome, financial experts recommend having a clear plan for using these funds effectively. Whether it's catching up on bills, building emergency savings, or investing in long-term financial stability, having a strategy can help maximize the benefit of these payments. For those receiving other forms of government assistance, it's important to understand how these stimulus payments might affect other benefits. In most cases, stimulus payments won't count as income for determining eligibility for federal benefits programs, but the specifics can vary by program and situation. Looking ahead, there are several key dates and deadlines that payment recipients should keep in mind. Besides the May 17th processing start date, there are important timeframes for claiming missed payments, updating personal information, and addressing any issues that might arise during the distribution process. The implementation of these stimulus payments also reflects broader changes in how government assistance is distributed. The increased use of direct deposit, digital tracking tools, and automated systems represents a significant evolution in how financial support reaches Americans in times of need. As we wrap up this comprehensive overview, it's worth emphasizing several key action items for potential recipients. First, ensure your information with the IRS is current. Second, monitor official channels for updates about the distribution process. Third, have a plan for using these funds effectively when they arrive. And finally, stay informed about additional support programs that might be available to you. If you found this information helpful, don't forget to like this video and subscribe to the channel for ongoing updates about stimulus payments and other financial news that could affect your wallet. Drop your questions in the comments below, and I'll do my best to address them in upcoming videos.